It's Jay Meisler here, July 11, 2014. Current time is 16:10 GMT, just past noon, New York time. I'm doing the week ahead today, as market's not going to move that much until the close, I don't think, and give an outlook what we might see in the coming week. I think one thing we should notice is the reaction in dollar Canada today to the weak jobs report. I think it's very important. The market's been trying to react to data all week. This is probably the only time it ever follows through. And it's all about interest rate expectations and what might change them. Market was starting to think that the Bank of Canada was at least on par with the US, and the weak jobs report kind of dampened that, caught the market short, boom, boom. You saw what happened. Next week is a full economic calendar from the US, but the key is going to be Yellen's testimony to Congress. That will give you a clue whether the Fed is sticking to its dovish, we'll raise rates whenever we feel like it, rather than what the market really wants and how it reacts to the latest jobs report. So Yellen's testimony next week is going to be the highlight, although there's a full economic calendar, and this is what we have to look forward to. Meanwhile, let's look at the market and see what we see in the Eurodollar at least. It's been 7 days where it's traded somewhere around the 136 level. Okay? That's 7 days in a row. And you people know, who follow me, what I think about something like this. The longer this goes on, the greater chance of a directional move is once it's broken. So right now we've been in a range, really 135.75 to 136.50. It looks to me like the greater chance is for the downside to break, but we know how spooked this market is, not only by geopolitical events, although there has not been a much follow through there, but by interest rate expectations. In that regard, here's what you watch. I'm going to put in big print, 2.50% in the 10 years. That is a key risk indicator. If we ever go below that and stay below it, it would set off some real concerns. If we stay above it, then the market is still going to feel eventually bond yields are going to go higher. So it's 2.50 in the 10-year. That's what you look at. Otherwise, if you look at the 4-hour chart, no change. 135.75 is key support here. 137.50 right here. This is a very 137.50 actually is here now. Very well defined range. We've been down below 136 7 days in a row. Still have not cracked that level. Look at the 1-hour chart. Similarly, this is 135.88, 135.75. Very clear that is your key support band. Blocks 135.50 and then 135.02 with major support at 134.75. On the upside, we'd have to go back above 137 to break what's right now been a 135, 137 range. How long that lasts really depends on whether Eurodollar can hold 135.75. That's it for the coming week. You're going to have to watch data because the market needs something to trade off of. I said full calendar from the US. You've got some data coming out of the UK, light from the Eurozone, but little to dispel the feeling that their economy is very slow. So that's really it. I still see eventually Eurodollar breaking to the downside. Question is timing, and really probably need the US dollar to, US interest rates to go higher. Same with dollar yen. 101.50 is key on the upside. On the downside, it's 100.0073, I think, is the 2013-14 low set in January. That's the level it needs to hold to keep a lingering hope that dollar yen will eventually break higher. In the meantime, that's it. One thing, by the way, and I'd like you to look at this. You see, I've posted things before. Right here, these are my 20 common sense trading tips. Anybody who hasn't read it is missing out. These are tips. I call them tips. They're strategies that you can use on an everyday basis. You will walk away with something that you can use. Just click on this link here, my trading tips. There are 20 of them, and they're all common sense. So I strongly suggest taking a look. That's it for now. We'll touch base either Monday or Tuesday. Good luck, good trading. The parameters are very clear on the Eurodollar, 135.75 to 136.50 initially. But unless 136.50 is taken out, the risk I see staying on 136 with the risk eventually to go lower. Okay, good luck, good trader.